Well, hello everybody, and welcome back to another edition of the Forex Market Preview. My name, of course, is Jason Stapleton, and I appreciate you guys being here. If this is the first time you're watching the show, or I guess the show, first time you're watching this video, I really appreciate you being here. There are now nearly 60,000 people who are subscribed to this channel, and I appreciate every single one of you. And each day, what I try and do, or each week, what I try and do is bring you some good ideas on what's going to happen into next week, some things that I'm looking at, and also some things that maybe we learn a little something as well, so that you walk away with a little bit of education in addition to a little bit of technical analysis and maybe some good ideas for next week. And we have not talked about advanced pattern formations in a while. Or pattern recognition. And so what I thought we would do is spend a little bit of time just discussing that here today. And I have the euro dollar, and we're going to use a couple of different techniques in order to analyze this most current price action here and try and be predictive in our analysis. And pattern recognition and the use of pattern formations is essentially that's what it is for. It's predictive. Unlike if you were using, say, indicators and oscillators to wait for everything to kind of turn up, and then once you see that, then you buy or then you sell, or if they turn down, you sell. This is really designed to anticipate what the market will do when it reaches a certain point. And so it's also important to note that there is absolutely no way to tell where the market is going to go, whether or not a pattern will complete. I don't care whether you're talking about double tops or double bottoms, or whether you're talking about advanced pattern recognition, which is what we're going to discuss today. Any of that stuff, it doesn't matter. Nobody can ever be sure what's going to happen. What we can do is, since we have very specific rules for the patterns that we use, we can make some assumptions based on if an entry point gets triggered. So if A, B, and C, and D and all happen together, then we can be predictive in our analysis with some degree of accuracy, because we know historically how a specific formation has played itself out. Now, the last point I will make to you before we start talking about pattern formations, because it's been so long, is that these have been around for a very long time. I mean, originally you can go all the way back to Gartley in the 1930s, the 1970s. You can talk whether you move forward into the late 90s, which is where you had Pesavento and Carney talking about pattern formations, or whether you move into and now on into current day. Everybody has a little different twist on these. And it went from being basic, I guess, recognition in terms of just seeing different movements happen, all the way through to, Pesavento and Carney putting in Fibonacci levels to it. And then what we have done, or what I have tried to do, and what we tried to do at Trade Empowered, is just take that one step further and be, I guess, a little more specific in the ratios that we use for pattern trading. And so that's why you'll oftentimes hear me refer to it as advanced pattern recognition. Is just simply because we're trying to move the science, I guess, the science forward, if you can say that about it. And so I say all that to suggest to you that what you see here may in fact be unique to pattern recognition. It is likely different and may be different than what you hear other places. And that is not to say that what we're doing is better or worse than what anybody else does, right? The important thing is that whatever you do, what have we said here from the beginning? Test, 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 test. Try and eliminate as much subjectivity from your trading as possible so that you can get the clearest historical perspective possible. That's really the trick, guys, is that if you go back in time and you look at, for example, pattern recognition or pattern formations, and you say, okay, I'm going to use these set of rules to determine when to make entry and when to exit, the clearer those rules are, the more likely you are to get an accurate representation historically of what your particular trading strategy will do. And it works for pattern recognition. It works for a simple indicator oscillator trading, or what we would consider more of a mechanical trading system. It works for trend following systems, counter trend systems. The clearer you are, the less subjectivity you have in your trading, the more likely you are to have a good back testing and also to be clear in what you're doing when you're trading in real time. And so I want to show you, we're going to look at a Gartley formation here, and we're also going to look at a butterfly formation. And so the first thing I want to key you in on is we've got a couple of different moves here. We've got a move here, and then a retracement, and then a rally up, and then we've got a pullback here. And we could get more specific in there, but that's essentially the big move that's occurring here. And then last but not least, we get a move here. Now, one of the common questions that we get is when you start talking about drawing Fibonacci levels is how do I draw them? What are the levels that I'm supposed to use? Do I use this swing high to this swing high, or this swing high to this swing high, or this swing high to this swing high? And in truth, yes. Right? We talk about sore thumb low to sore thumb high, and people outside of the U.S. don't know what that is, so let me explain it to you. Imagine that you're nailing a board, and you put your hand down next to the nail on the board, and you start whacking the nail, and then all of a sudden you miss the nail, and you end up hitting your thumb, right? And it swells up real big, and it turns purple and green or whatever, and you're walking around town. Well, now every time someone sees your hand, your thumb sticks out. It sticks out like a sore thumb. It's obvious that there's a problem there. So when we look at this stuff, we also look at, okay, let's look at sore thumb low to sore thumb high. And so I'm going to start drawing in a couple of fib levels for you here. So we've initially got this low to this high. That's clearly 1. So we can take our Fibonacci retracement tool and we can grab from low to high, right in there. And you can see that we come down into a 786. Right? And so we can call this, you'll hear us refer to this as an initial impulse leg, or you can also refer to it as an X to A leg. Then you get a next retracement from A to B, and you get a retracement from B to C. Now, the next thing we want to look for is a potential termination. And we know, because we came into a 786 first, that we're likely going to be looking at a butterfly formation. And so I'm going to grab my Fibonacci extension tool here, and I'm going to draw in swing high to swing low and back down in. And you're going to find a 127 extension coming in here at 106.70, or 106.70s, excuse me. And so if, and this is the big question, is if the market continues and reverses here and comes back down into a 127 extension, we're going to have a nice little pattern formation here that is tradable. Okay? Now, there are issues with butterfly patterns, mainly with stop placement, because we like to use structure for stops, and butterfly patterns don't provide us that, because one of the key characteristics of a butterfly pattern, the butterfly formation, is that the D completes outside of X. So the final formation here completes outside of X. And so we have to be very, very careful when talking about, or when placing stops on this. We have to have some other methods for using stops other than structure, because we don't have a structure support level here. The next one we have is way down here. But inside of this entire thing, we also have another potential formation setting up, and we can do that by looking at this leg of the move, the low to high here. And if we drag our Fibonacci retracement tool from low here to high, you're going to see that this initial pull, and I should probably delete the rest of this stuff. So let me delete that. That'll work. So we get a, whoops, no, that's not what I wanted. Hang on here. That's what I wanted. Okay, so let's drag our Fibonacci swing low to swing high, and you can see now that this pulls into a 618. Now we know, because our initial test was a 618, is that we're likely looking at a Gartley formation, if you want to call it that. And so what we're looking for is a termination around the 127 extension. Again, that would give us a formation that looks more like this, instead of having, because our termination point is still the same. It's still the 127 extension. Only this time, it would look something like this, right? Now again, where do stops need to go? Look left, previous structure. That means if we're going to buy here at the 127 extension, our stops have to go below here because we know that this area in here, and we can make this whatever color we want to, but this is basically what I call the kill zone. I believe Carney refers to this as the potential reversal zone, right? And so as the market drops into this area, this is the area where there is a likely going to be a reversal, right? D completing way over here. And what we want to see is we know that this is the range that we need to give the market in order to determine whether or not we're right. And one of the things that I talk with traders about is I say, well, where should you place stops? Well, you should place them far enough away that if they get triggered, you know that you're wrong. While at the same time, not so far away as to provide an abject amount of risk in the market. Now, there are a bunch of different ways we can do this. We can do this based off ATR. We can do it based off of fixed PIP. We can do it based off of structure. We can do it based off half a dozen different ways and still be okay. The way we always do it with pattern formations is we look left and we say, here's the structure level, boom, right there. So we know if this is the area we have to give the market, that stops need to be under here, under 105.09. And so stop placement would go down here around 104.78 or somewhere around there. And we would know, hey, if the market comes all the way through there and triggers our stop, that we need to get out. Why? Because if this pattern is valid, we shouldn't violate X. We shouldn't drop below this area. So anyway, that gives you, on this chart alone, there's a couple of different patterns setting up, both of them completing at about the same place at 106.70. And the choice is, which one do you trade? And that goes back to the trading plan. And so I just wanted to kind of show you guys a couple of ideas here on pattern formations, get you guys back into and not leave that for too long, so that because we've been focusing so long here on basic structure and basic pattern analysis that I want you guys to remember that there are additional ways to do this. That there's more to it than just looking at trend continuation trading or double tops followed by breaks of structure. Those types of things are great, and you can absolutely, in the war room every single day, that's what we focus on. But you also get from Akil a lot of advanced pattern formations here. And so if that is something that interests you, you're free to join. It's $1 for a month, and what I do is every morning I come in and trade. And we show you the trades, and we post the trades in real time, and then we talk about the trades. And the idea is not for this to be a signal service for you. That's not what I'm trying to create. What I'm trying to do is show you, hey, even if you use a couple of simple, very basic technical analysis systems or strategies, if you trade them with consistency over time, you're going to be successful. And we have losing days, we have losing weeks. We have last year we had several months where we just couldn't seem to get into any new structure highs on our account equity, and you get to see all of that in real time. That's the objective of War Room, is that you see trades placed, you know when they're being placed, you get an understanding of why they're being placed, and then you get to see the long-term results. Too many times we focus on the short term. We focus on, over the last 2 days, he hasn't been able to make any money. I've been in this room a week, and there hasn't been any money made here. And the truth of the matter is, I had a conversation with someone recently, fantastic story, about trading on a trade desk, and I can't share it because I didn't ask for his permission, but I'm going to go get his permission to tell you this story because it is critical. Let me just say it to you this way. I don't care who you are. Every trader hits a patch where they can't seem to make any money, where nothing that they do seems right. And they could be crushing it for months. It's just like, I've finally gotten it. I finally figured it all out, and I'm there now. I've reached the precipice. And then all of a sudden, everything turns to you know what. And they can't make any money, and they don't understand why they can't make any money, and everything that was working so well yesterday isn't working today, and what's the change up, and now psychologically you're starting to break down, and you don't really know what to do, and that's having an effect on your trading. Everybody goes through that. The difference, what separates really good, successful long-term traders is being able to overcome, trade consistently through that drawdown and come out the other side. So few traders ever achieve that. And the purpose of War Room is to show you that and do it every single day so that you can become essentially part of a year-long experience. And I told guys at the beginning of the year, I said, you join up for a year and you get to see the whole year. And that's what that does for your psychology, or what I'm hoping it does for your psychology, because we're into year 2. Year 1 went really well. We're now into year 2. And what I'm hoping that does for your psychology is give you a new understanding of the way professional traders work and how they operate. Make sense? All right. Let's look at one more thing here before we go. Aussie Dollar has broken this structure. We were looking at this structure for a possible pullback. We are now up into this resistance level here, looking left. You've got 1, 2, 3 tests here. Keep an eye on this as we roll in. If you want to drop down to your daily chart this week, watch for a break of structure here, some sort of double top in here, something that gives us an indication that the market may be looking for a reversal, potential 2618 here, because as we look out on our higher time frame chart, we are up against some pretty significant structure support here. So keep an eye on that. I do all those things. I'll be back here next week. Don't forget to subscribe to the YouTube page so that you get the video every week. And don't forget to subscribe to the email list so that anytime we're doing something else cool, because we do trainings pretty regularly for free. Just come in and we learn a little something about psychology, a little something about technical analysis. So make sure that you're on the email list as well. And you can do that by going to tradeempowered.com and just signing up. So if you do all that, I'll be back here next week. Till then, good luck, good trading. Talk to you soon.